tricky. Tricky could be something commodity related. Copper. Let's go with copper. So that's what I think. And no, I don't think commodity prices rising in a business cycle are significantly inflationary. I know everybody gets caught up on that. I don't know. The Fed are usually faster off the trigger, to be honest. The Bank of England might do. I mean, their economy is a fucking shit show. But they've got very high inflation as well. So it's tricky. Even though inflation, really most of this is mathematical, the UK has a problem because of Brexit. They created their own bed of nails, and now they're lying in it. And then, really, what happened to us? Really? Everybody told you, but you wouldn't listen. So I don't know who's going to go first, really. It's a good question. I don't think it really matters because bond markets are so correlated, so they all kind of price at the same time. Crypto is just a technology. It is a distributed database, which is blockchain, of which you use a token to represent value on that chain. So unlike other networks, let's say a telco network, you can't own a share of the telco network while you can with a token, which gives you a share of the network itself. It kind of enhances Metcalfe's law. Blockchain solves some huge problems, which is how to have, I guess the Byzantine general's problem is at a larger level, but really for me, it's a very simple thing is in an increasingly digital world, we need to transfer, record, store value, and value is increasingly becoming digital. And in the digital world, we can make anything to infinite abundance. And so everything digitally goes to zero in value. And blockchain allows you to create scarcity in a digital world. Also, the ability to have digital integration of contracts and value in a whole bunch of different ways allows payment systems, securitization, tokenization, speculation. I mean, it's so vast. So basically, extrapolate all that way, it's technology you can participate in directly. AI, you have to buy NVIDIA. That's the only bloody thing you can do. Bit of Microsoft, bit of stuff, but you're buying $1 trillion companies. You know, how much money are you going to make?
BlackRock's Bitcoin move ignites Europe's crypto investment frenzy. Grayscale's spot. Bitcoin ETF encounters further setback. $94 million of ETH acquired in 7 days. In a span of just 7 days, 4 major Ether holders have acquired an estimated $94 million, or 56,100 ETH. Pantera Capital predicts Bitcoin to skyrocket to $148,000. Post-2024 halving. Founders of crypto mixer Tornado Cash accused of laundering $1 billion SEC charges, former U.S. Correctional officer with fraudulent crypto token sale. 2 more U.S. SEC attorneys withdraw from XRP lawsuit. Now let's begin our enlightening discussion with Raoul.
Really is a summer lull right now. Everybody's on bloody holiday. So markets are just sloppy. There's nothing really going on. There's no new money around. Everybody's in the Hamptons. All of that kind of stuff is going on. So you have to be patient in summer market as rates have been decoupling from the market. So I actually got stopped out by bond trade. Finally, I got out of that bloody pain. It was a terrible position because bonds basically decouple from the business cycle this time around. It's nothing to do with inflation. It's actually to do with liquidity because of how the Fed are, the Treasury are issuing so many new bonds to pay the interest on the bonds because rates are so high. They're doing it in the bills market. That's draining the reverse repo, but it's still flowing through into the rest of the bond market, and yields have been rising. That whole process has started pushing the banks lower again. So I'm keeping my eye on that. My view has been, and it's not a precondition, but my view has been that we're likely to see the banks starting to fall. I'm looking at, for example, I put on Twitter, the long-term chart of Citibank looks like the cliff of death, looked like all of the European banks did. I've been looking at Bank of America, doesn't look great. And then the regional banking index, the KRE. So that would be a tipping point that would start changing the equation. What else can uncouple markets? well, the bond yield issue in itself can uncouple markets. But what it's telling me is we're getting closer to more cowbell. That point where the Fed have to go, oh, and that happened last time, if you remember, in December 2018, when suddenly the repo market broke and the Fed was like, we're stopping QT, and we're not going to hike anymore. And then they started cutting 6 to 9 months later. We're in that phase, I think. Let's see what Jackson Hole has. Powell still thinks he's Volcker, and it's a ridiculously different environment, but that's what they want to believe right now. So my guess is that the payback for this is, I think they're going to undershoot inflation. So I'm strongly of the opinion inflation is well below 2%, maybe even as low as 0 by the end of the year. And that's been my call for a while now. And I think core inflation goes to 0 by summer to this time next year. So I think we've got all of the inflation domino to play out from the geomite business cycle dominoes. We have, I think, a rise of unemployment will come over this period. I don't think it's going to be huge because there's some complications in the labour market as people are leaving the labour market, etc. And I think rents are coming down, all of that stuff. So what we're likely to see is the Fed going, oh my God, sorry, we've undershot, which gives them the cover to cut rates, which they need to do because they cannot pay the interest on the debt at these levels ongoing. They've got about 13 trillion of debt to roll over plus new issuance. They need to get rates lower and they need to then monetize the interest payments. That's part of the everything code thesis, those of you who've been following along at home. So the everything code thesis suggests that Q4 is going to be when this start of action starts happening and we don't, maybe QT stops, maybe we get a rate cut, maybe we don't, but we start flagging it. And then we start to see, I think, another leg of the economic slowdown. I think we're actually bouncing out the forward-looking indicators of the ISM, all of this stuff I've been talking about in pro macro on Real Vision. That's where you get all the juicy stuff. So you guys watching this, most of you are pro macro subscribers, so you don't get all of the research that I put together, but we do a lot of stuff. And that's suggesting that we are going to see a sharp economic rebound. That was forecasted by liquidity and the GMI Financial Conditions Index. It is starting to slow down a bit because of these yields and the dollar stabilizing.
Don't forget to join us as we explore the unfolding events. Pepe Developer Wallet sends $15 million to Binance, OKX, and Bybit, hedging Bitcoin and Ether. FTX seeks court approval for strategic partnership with Galaxy Digital. Ethereum phone sells out while Solana slashes Saga phone price. Cypher says token offering part of steps to make users whole.
And so that suggests that Q1 next year, we might get a pickup in growth at the end of this year. Now, that won't come into GDP. GDP's lagged. Everything kind of lags in this. So GDP should be weaker in Q4. I know that the Cleveland Fed have this ridiculous 5.9% number. That'll go away. But we should see GDP low, but the forward-looking indicators, stuff like ISM, start to pick up. And then we might get another slowdown within Q1. But I think at that point, the market is more focused on the cowbell, more stimulus, etc. And then we're into the full election year, and the full election year is cowbell central, because then you've got stimulus to try and bribe the voters, rate cuts to bribe the voters, the use of the balance sheet to try and not get the Treasury to end up with ridiculous debts on their trying to issue ridiculous amounts of bonds and the market not be able to do it, and crowding out the private sector. Sorry, I'm speaking very fast because there's a lot in the everything code and I can't really get it across in a very short thing. Anyway, all to play for Q4 when it gets interesting. Everyone needs to get back from holiday, and then we can see from there.
BlackRock's trailblazing move to launch a Bitcoin fund in the U.S. is reshaping Europe's financial scene. Interest in crypto exchange-traded products, ETPs, is surging, echoing global capital shifts. European investors are embracing crypto ETPs, fueled by BlackRock's lead. June saw a 150 million euros influx, contrasting May and July's outflows. This trend aligns with worldwide inflows, reaching $610 million, 560 million euros in June and July. Fidelity, Invesco, and WisdomTree are joining the Bitcoin race inspired by BlackRock. Their focus on spot Bitcoin exchange-traded funds, not futures, sets them apart. Hector McNeil of Hanataf hails BlackRock's move as hope. Ripple effects are boosting Bitcoin ETP flows, positively affecting its price trajectory. As Europe adopts crypto investment, BlackRock's step echoes, ushering new financial opportunities. This dynamic capital movement signals a shift in investments, merging tradition with cryptocurrencies. BlackRock's risk-taking is reshaping investments, leaving a lasting mark on Europe's financial narrative. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing!